Hi, and welcome to my presentation, Who Took My Money? How to stop the big banks and investment companies from robbing you blind. How to find an extra $1,000 to $2,000 per month and use it to invest in real estate to build long-term wealth. Presented by the Vancouver Real Estate Club and myself. My name's Thane Lance. So overview, this is what we're going to be going over in this quick video. Number one, who the heck am I and why am I able to talk about this stuff? The discoveries they don't want you to know about. Where is your cash? Where is it going? What can you do about it to put more money in your pocket and stop giving it to them? And then where do you go from here? So first off, I'm not a lawyer, I'm not an accountant, financial planner. I'm a licensed real estate investor and a licensed real estate agent. So I'll be able to help you out with those aspects. But again, you want to be seeking professional advice as well, as always. So real estate investing does have risks associated with it and obviously can never be guaranteed. So next up, my name's Thane, and who am I? Well, I began my career as a sales and marketing consultant in 2007, full-time. And then recently got my license with Sutton Group, West Coast Realty. They're the #1 real estate brokerage in the country since last year. And since 2008, I flipped over 100 doors as an active real estate investor. I took the Action Weekend, which is a training course, and other trainings. I've spent multiple thousands of dollars learning real estate investing training, which allows me to see through the different stories and different agendas of people in this industry. So I'm able to help you out and share that with you. So first off, I bought my first building in 2010, 14-unit building with investor partners, joint venture partners, created over $300,000 in net worth for everyone. Number two, bought my other building in 2011, 20 units, created over $1 million in net worth assets and over $5 million in total assets. So I know a little bit about what I'm talking about here. So let's get started. So what else have I done? I am a 2-time finalist for Investor of the Year with Creative Real Estate Wealth magazine. That's the magazine there. It's fantastic, and those are my 2 finalist awards. Recently founded the Vancouver Real Estate Club to teach creative real estate investing strategies, customized to local market here in BC and throughout Canada. And I've also been interviewed on the radio and online multiple times as a subject matter expert. Here on the Radio Real Estate Show on Saturdays on CIL and Radio Talk Time, Drive Time on CBC Radio. So first off, here's the presentation. Where is the money? Where is it going? So often the average Canadian consumer complains, I have good income, but where is it going every month? It's because they see their money coming in and going out. They just don't know where it's going. Well, we're going to reveal where it's going and who's benefiting shortly. So this is what's happening. Remember the old song, hands in my pocket, hands in my pocket? Well, this is who's got their hands in your pocket and then what they're always looking for and why they have their hands in your pocket. So basically they're looking for commissions. So mutual fund representatives, they're there to sell you securities and mutual funds. Yep, they're there looking for their commissions, especially the bank ones. Life insurance representatives, they're looking for their commission check. A mutual fund life insurance combination, they're looking for their commissions as well. Mortgage brokers, they're here to push you into a mortgage. They take a commission. I'm a real estate agent as well, but again, we make our money through commissions as well. So realtors want commissions. Real estate syndicators, they want commissions and profits. So all these people, all these different people in the industry are there taking their hand in your pocket every single month, taking their money out. And this is what it works out to. Here's some of the numbers. So first off, let's start with your average Canadian family and how much they're spending on each of these different expenses every month. So let's say they go to a mortgage broker, they go to a real estate agent, they find out how much a mortgage they can get, and then the mortgage company always says, well, you can do up to 40% of what's called your gross debt service ratio. So what they do is they take 40% of their income, put it towards a house, maximize it out, and boom, they've just of their $1,000, $2,000, $4,000, $10,000 paycheck each month, they're spending 40% for mortgage right off the top. So that adds up to 40%. Then they get a brand new car, they lease a brand new car, again 15%, that goes on total percent. Now they're up to 55% of their paycheck every single month. Well, then they have to invest for retirement and they have to have insurance properly. So again, they talk to an insurance agent, 10% of their income goes up to that. Now they're past 65% of their total income. Then they have eating out and splurging and hydro bills, utilities, 5%. Now they're passed up to 70. Well, the government hasn't even come yet and taken their hand out. So the government's got 20%, 30% of their paycheck going out towards taxes. So there you go. Now up to over 90% of their paycheck, discretionary income gone. So that leaves them with little over 10%, if that, available every month. And that number is getting smaller and smaller every single month. And what happens? What if they have a line of credit? They have a nice house and they have a line of credit on it to take a trip or to do some renovations. Well, how do you pay that back? And credit cards at 12%, 16%, 18%, 20%, especially store-bought credit cards. Well, how do we pay those back? So this is the story of why the average Canadian's falling further and further behind. So is it any wonder that the average Canadian is falling behind, increasing in debt, using negative leverage, so buying bad assets and then borrowing against it to take trips and buy doodads like boats and cars and vacations, rather than spending to invest in assets that increase in value like real estate, cash flowing real estate, and stocks that provide dividends. And so this is why the banks, again, with their fees and their mortgage brokerage breakage fees, that why the banks are posting record profits year after year. So this is a traditional family, husband and wife, usually 2 kids. So this is the average Canadian. This is how they look. Again, this is across the country. So in Vancouver here, our housing prices may be a mortgage at $600 or $800 or $900,000. But on average across the country, mortgages are about $300,000. Houses are $400,000 with a $300,000 mortgage on average across the country. So right now, they take the average traditional mortgage, 3.69% fixed, gives them a current payment of $1,273 a month. This is what the average family does. They invest $200 a month in their RSPs or retirement. Then they have a $20,000 RSP saved up. So they've been saving for 5-10 years, building it up. Then they have a universal life insurance policy. The insurance salesman sold them a universal life policy. So they spend about $200 a month on that. Then they have a car loan, $20,000. They're spending about $500 a month on that at 12 or 14%, whatever that is. Then they have credit cards at 12, 14, 18, 16%. So they got a $5,000 credit bill, $150 a month. This is the average family falling behind every month. So their $3,000 paycheck, $3,500 combined income gives them total payments out of pocket of $2,326. So they're not exactly being able to build wealth because all these other people have taken money out of their pocket every month. So this is what we do. This is how we're going to fix it. It's using something called a readvanceable line of credit mortgage, and I'm going to show you exactly what the results are, and then explain how to do it for yourself. So this off. So remember, we have our traditional mortgage at 3.69. Well, we're going to split it and switch it over to a readvanceable line of credit interest-only mortgage at 3%. And these are available through multiple different lenders. So same amount of mortgage. And let me put you on hold for a sec here. All right, let's welcome back. So here's, we're doing a readvanceable line of credit mortgage. So the total amount is still the same. Our current payments were $1,273. Well, because we're doing interest only, our new payment's going to be $563, 3% mortgage. So you just saved up $710. And the reason we do this is for cash flow, and I'll explain it shortly, because you may be confused about doing interest only. How do I pay down principal? How do I build value? This is how. So we're just saved up immediately $710 a month. Step 2 is we're going to start investing in non-RSP programs, basically real estate, investment grade rental real estate. I'm going to show you the benefits and values of that and explain why, because you can get a better return in investment real estate than you can through traditionally bank-owned mutual funds, which is what most people do. So we're going to save up that $200. We're going to put it into investment real estate instead. So we're going to save that. That's saved another $200. Again, the RSP, we're going to withdraw it, and we're going to get cash out at $222 a month. We're going to invest that into real estate as well. So that's a bit money cash back to us. We're going to get a better return on it. So universal life, we're going to do term life insurance instead. A lot simpler, cleaner. Again, the reason you're sold universal whole life is because the insurance salesmen make a bigger commission that way. They don't make a very big commission on term insurance. Term life insurance accomplishes the same goal. It's just a lot less inexpensive. And again, your entire reason for having insurance is to set yourself up, set your family up with enough passive income that all their expenses are covered. We can do that through real estate and investment equity in real estate. That will set up your children far more than a life insurance policy will. So we'll cross that at the $200 out there. do like a $50 or $25, $50 a month term life insurance until you can build up enough equity. Next off, we're going to roll our car loan into our mortgage, a readvanceable line of credit mortgage. So we're going to swipe off, take away that $20,000, roll it into the mortgage. And so we're going to go from $500 payment, 14% or 13% car payment, into a 3% car payment. So we're going to pay $37 a month. So I just saved you another $463. On average, numbers may vary, but this is what the math roughly works out to. Next off, we're going to take those credit cards, roll it into the mortgage as well. And we're going to knock those down from $150 to $10. 3% on $5,000, $10. That's the new payment per month. So we saved you again another $140. So total freed up $1,935 from our original $2,323. So we saved up a huge amount, and we're going to be able to use this to build wealth. So you're going to be paying yourself first, if you've ever heard that saying. Always pay yourself first. This is how we do it. We free up cash, and then we create cash flow through rental real estate. So how do we do that? Wow. So number one, consolidate as many debts as possible. Show you how to do that in a sec. Seek out the lowest line of credit readvanceable mortgage product out there. So I'll give you a list of lenders for that. Start negotiating commissions with salespeople, finding out what they're making. Ask them why. See if you can lower that down. Start negotiating. Don't get bossed around. Don't tell people, or don't have people just tell you what to do. Be knowledgeable, and you'll be able to negotiate from a position of power. Question the banks and the RSP industries. So there's RSP season. Well, there's actually RSP season is all throughout the year. It's just the banks have a marketing program in order to get you to buy their bank-owned mutual funds. And they're not great. They're not the greatest of options for you. So focus on freeing up cash flow, monthly cash flow. That's what we're aiming for, is cash flow. So we'll go over that in a sec. Awesome. So here's one way to do it, the simplest way. So a number of different banks have what are called simple interest or line of credit, readvanceable line of credit mortgages. So basically, this is the traditional way it's done things. We have our bank account, we have our expenses, we have our credit card, we have our home, we have our car, we have different bank accounts, different cards all over the place. So it's just a big jumble. And we're paying different rates of interest all over the place. So what you do is you recombine everything into one large account. So all your income goes in, and then all the expenses are paid out at a very low interest rate, usually about 2.85 to 3%. I just got off the phone with a lender that does 2.8% line of credit mortgages. So this is basically what's going to be happening over the next 30 years. So if you do a simple interest mortgage, you're going to be saving yourself a huge amount of interest because interest starts compounding. So over time, as you hold a 20, 30, 40 years over time. So by doing a simple interest line of credit mortgage, you're going to be saving yourself tons and tons and thousands and thousands and thousands of dollars. This is how you build wealth. So let's summarize it. So basically, your new mortgage payment includes all your line of credit mortgage, your car loan, your credit cards, adds up to $610 a month. You freed up $1,935 freed up per month. Your new mortgage payment, you take that, combine the two, you take up your money freed up, then you have the option of, boom, paying down all of that onto your mortgage. Because using a line of credit mortgage, you can pay out as much as you want that month. If you want to make a $5,000 mortgage payment, you can. You can put down a $20,000, $40,000, $50,000 mortgage payment. There's no penalties. It's completely flexible account. You can pay as much as you want. So this is just one option. If you want to become mortgage free as quickly as possible, you can pay off your mortgage in 12 and a half years versus 35 years using this strategy. But there's other options as well. I'm going to suggest the way to grow wealth is not just to save, but to invest in assets that appreciate, that have equity and mortgage pay down of value, and that's rental real estate. And I'll show you how to do that shortly. Next up, there's what happens if the real estate market collapses. So people always ask me, well, there's actually ways to protect yourself. And this is what hedge funds use in the bigger boys, as they call them, in the States. They use hedge funds and ETFs and investment funds and ultra bear funds. So these are funds that bet against the real estate market. So as you can tell, these big spikes here are what happened in 2008. So if you held these shares $2, $3, $5, whatever this one here is $2.50. You held this share right now. If you bought it for $2.50, and 2008 happens again, so the real estate market crashes, investment or borrowing money is hard to get. Mortgages are hard to get. The real estate market collapses. These things shoot up through the roof because they bet against it. Whenever the real estate market does bad, these stocks and ETFs go up. As you can tell, the last 5 years to 6 years, the market's been going very, very well, so they're not doing very well. But what you want to be doing, let's say you're going to investing $100,000 into real estate, either in the United States or in Canada. What you do is you take 5% of it, $5,000 of that $100,000, and put it into either of these funds. Let's say you're investing in Canada, put 5% into the Canadian one. Investing in the States, put 5% into the US one. So just in case you hold a property for 5 years, just in case in 3 years later it crashes, your ETFs, your protection, will go up in value quite substantially. So your $5,000 in shares could go up to $100,000 to protect yourself. So it's not a guarantee, it's just an insurance policy. You're not going to make money if the market continues to go up and is solid and is fine. So this is just protects against insurance, or protects against loss, just in case. So it's just a way to protect yourself. So I'll explain how to do that shortly as well. Next off, what we'll be doing, with all this money that we're saving, what are we going to be doing? Well, I'm a real estate investor and agent, and so I'm going to suggest that you put your money into an asset that has both cash flow, equity buildup, and possible appreciation. It goes up in value no matter what, according to inflation. So guess what best does that? Rental real estate. So I'll show how to do that shortly. So real estate's got 3 profit centers. Cash flow. So rental money comes in, expenses are paid out, and then you have money left over. It's called positive cash flow. And yes, you can do it in BC, all over the place. There's lots of opportunities for positive cash flow here. Again, the renters are going to be paying down your mortgage. So when you rent, you're paying down your landlord's mortgage. When you're the landlord, your renters are paying down your mortgage. So that's a guaranteed payday that comes in your pocket every single month. And next up is appreciation. So property prices that's worth $100,000, maybe next year it's going to be worth $105,000. So that's a 5% appreciation rate. It's possible, happens all the time, especially here in the Lower Mainland. So here's some examples. So the money, and when you're looking for always, is in the mortgage pay down. That's where the leverage is. That's with the new mortgage rates where they are. I'll explain in a second what's happening. So mortgages traditionally used to be about 4 or 5%. When you have a mortgage payment of 4 or 5%, you have your monthly payment of whatever it is. Then you have your principal payment of that $872. It's $255, certain percentage. Actually, it works out to about 30%. So when mortgage rates are relatively high, most of your payments going to interest. But the thing is, as the mortgage rates go lower and lower and lower and lower, right now we're at about 2.5 to 3%. Right now, with mortgage rates going lower, your payment goes down a little bit, but what's your percentage of the payment you're making of principal, which is your equity, the profit you're making, goes up and up. So on your $749 monthly payment, it's fallen, your principal percentage of it shoots up quite substantially. So 315 of 749 is 42%. So of the amount of money you're paying, 42% of it's principal. It's not you're paying, your tenants are paying it for you. So that's where the true leverage and growth is in rental real estate. So I'll give you some examples. So let's say a property is appreciating in 5% a month. So that happens. There's a number of different places where properties are not 5% a year. Number of places where this happens. So everyone focuses on cash flow. Let's say you make $50 a month positive cash flow. Well, then your return, total amount of your return is about 1.5 to 1.2%. Your mortgage pay down, this is key. This is your guaranteed money, your monthly equity you're building up. Every single month your tenant's paying for you $315 a month. So that returns about a 7.5, 7.6% return. And again, can't guarantee it, but property prices go up 5% on that $150,000 mortgage. That's returning a 20% return into your pocket, 5% on on $20,000 down payment. It's $100,000 property, 20% down payment is $20,000. Property goes up to $105,000. $5,000 divided into $20,000 is 20%. So your 20% return plus 7 plus 1 gives you a total return of over 28, close to 30% annualized return. That's how you get wealthy. That's why landlords get wealthy in our society. So I'm here to help you get these same sort of numbers for yourself. Next off, we want to be looking for areas with good cash flow and highest potential appreciation. So that's just a quick way to do it. And again, my entire club, Vancouver Real Estate Club, is about finding these resources for you to invest in. So next step, what do we take with this knowledge? We've just freed up a huge amount of money. So what I'd like you to do, get into the thought process and being able to help you with, is buying an investment property, then making it cash flow, then buying another one, then waiting a year or two, buying another one, waiting 1 or 2, buying 1 or 2 per year. You go next and next and next and next. So what I suggest doing is buying a $80,000, $100,000, $150,000 property. And yes, they are available in BC. There's lots of them. I've got 83 of them that are available within a 1-hour drive of the Lower Mainland. So what that does is the renter is going to be paying down, building your net equity. So looking for net equity of about $400 or $500 a month. Mortgage pay down plus appreciation. And looking for roughly about a 7% yield. I'll explain what that is. That's just basically your net profit based on your gross rental income. So every couple of years, you're going to be saving up, buying another one. Saving up, buying another one. All that $1,900 a month you've been saving, you save that up. At the end of the year, you have $20,000 down payment. Boom, you buy another investment property. You buy another one. You buy another one. Yes, there's property management out there to take care of all the problems, the issues of rental collection, problems. You have insurance. If anything goes wrong, it's lots of people rent out properties all the time, and they have very great success with it. So this is just how it's done. Next off, final results in 15 to 20 years from now, all your units, your 5, 6, 7, 8 rental properties are all owned free and clear. All the excess money you're making from each one, use it to pay down one, pay down accelerating. After all the mortgages are paid down, you're going to have between $2,000 and $4,000 a month in positive cash flow or equity. And that's going to be a pretty good retirement fund for yourself. So you don't have to worry about RSPs and what the stock market's doing, because this is going to be your way. And it's going to be real estate that you can go out and view and visit and have insurance on and protected. And you're going to be providing positive, really good places to live for people. You're not going to be a slumlord. You're going to take care of your tenants. You're going to treat them right. You're going to be providing a safe, healthy, good environment to raise their kids in. And you're just going to be helping people out. And it's going to be a way to build your wealth and helping and building a great retirement fund for yourself. So next off, how am I going to be able to help you with this? Well, I've created something called the Vancouver Real Estate Club. It's part of my real estate investing background and also part of my real estate agency. I can help you with all of these things in the process. I hold monthly guest speakers and monthly meetings, and I'm going to be able to invite you out to those. You're going to be able to attend as many as you'd like. We go over various different topics like no money down. Yes, you can actually invest with no money down investing in Canada. You can do rent to owns, very profitable for yourself. You can do seller financing, sandwich leases, down payment provided. Again, I'll show you how to make that lowest mortgage payment. We go into depth on how to do that. So value per meetings, we hold them once a month, are going to be about $97 each. So that's easily the value on that. Next step, we're going to be able to meet with you, going over a quick consultation to put down together your financing binder. So this takes where you're at, all those debts that you have and all that credit cards and everything will help you consolidate with a line of credit mortgage, take care of all those details. A mortgage broker, licensed mortgage broker will be meeting with you. And so I value this at about $197 for that meeting. So they go into your net worth statement, your balance sheet, property detail information spreadsheet, gather it all together. Just make you financeable on your next purchase so you can help start buying those rental properties. Next step is we have monthly training webinars. So all the meetings are held in person. Then we do an online version, and then we record those. And then you can go on the membership website, and you can take a look and watch those at your leisure. So I'm putting a value of at about roughly $97. So the meeting's $97, the value of the watching the presentation online anytime you want at $97. Next up, 3 to 6 hour intensive training workshops. So a number of topics, including 2 weeks to your next investment property, real estate scout bird dog training. So that's how to get referral fees and marketing fees from licensed real estate agents and mortgage brokers legally. How to find great deals, how to find investors and JV partners to work with, joint venture partners, how to prepare your financing binder, how to buy your next 12 no money down deals. So these are usually between 3 and 6 hours of training on a Saturday or Thursday evening. So the value per workshop on these, and number them throughout the year, I'd place between $297 to $497 value. 3 specialized by invitation only mastermind groups. So these are specialized topics. We get together between 8 to 12 different investors, and we all work together. We look to buy apartment buildings together. We set up a syndication. We do a commercial real estate, or we do rent to own and sandwich leases and fix and flip. We buy a nice little fourplex. I'm just doing that right now, fixing it up, and then selling individual units. So I teach you how to do all that sort of stuff if you're interested. I put a value of that 3 times per year, or 3 times per year at $297, and we meet every quarter. So next off, if you have a great deal and you need to access to joint venture investor partners to partner with you, well, I've got access to a Dealmaker database of over 80,000 potential joint venture partners. So if you got a good deal, I can take it to my list, we can package it, present it, and then we can find a joint venture partner for you. So I don't know what the access of this. You can make $1 million in a deal, or you can make a $5,000 profit on a deal. So whatever value attached to this, I can say it's priceless, because you can do 10 or 20 different deals using access to this database. So I'm going to call it priceless. Next off is deals packaged and done for you. Like members of my club, myself, I package up, present a deal, I get it under contract, I tie it up, and then we get a joint venture partner for it. All you need is cash and or credit, or either. You can just use credit, no money down. You can just use cash and get a good solid return, 10 or 12% or 5% or 8%, whatever the deal pays out, whatever leverage is in that real estate deal, you can benefit from that. So I package and present deals for you, which I can do as a licensed real estate agent. So value per deal in this, between $2,500 minimum profit on a deal to up above $50,000 or more, you can be made on these individual deals. So that's what I attach the value to that is. Here's some of the testimonials we've received from doing our seminars. It was a pleasure to meet you guys last night. To be honest, I've been to a lot of these things before, but most of them are just teasers to get you to buy their books or classes for $4,000 or $40,000. I can't believe you're doing all this for it. Well, I'll reveal how much it costs next, or how much the investment is next. The group thus far has given me more value. Thane has given away great treasures of information. This is from Jeff. Pretty much for free. Take advantage of it, hint, hint, if you're serious in any aspect of real estate investing, or just want to expand or gain knowledge as a homeowner. You won't be bored with the atmosphere and entertainment from the speakers. So if you want to know more, just visit over my meetup group. So what's the total value of all this information and access to the membership club, my Vancouver Real Estate Club? Well, let me see. Let me add it up here. So number 1, free in-person monthly meetings of 12 of them, $97 a piece, $1,164 value. Financing binder consultation, $197 per consultation. Unlimited access to the webinar recordings afterwards. I'd value that again at $1,164. 3 to 6 hour intensive training workshops at $297 up to $497 a piece. I'd value those at 4 of them, $1,188 a year. 3 invitation only mastermind groups, 3 times 12. I'd value that at $497. So that in itself is a value of over $10,692. Dealmaker access, again, is priceless. I have no idea how to even value that. If you make a deal for $2,500, it's worth $2,500 to you. If you make a deal and you can fund an apartment building that you buy with your joint venture partners, and someone provides all the cash and you make $800,000 profit in that, which is certainly possible and doable. Some members of our group, I've done deals like that before, very similar to that. That value is priceless. And again, deals done for you, $2,500 minimum, up to $10,000, $20,000, whatever the deal's valued at. So total value of all these packages and information and meetings and access and membership website and everything, total value over $1,695 easily. But am I going to make you pay for that? How much does it cost? Well, I was going to charge a monthly fee or $2,000 up front, or $5,000 or $10,000. Again, if it costs $2,000 or $5,000 or $10,000, is it worth it if the value is $16,000. You'd pay $15,000 to get $16,000 worth of value easily. You pay $5,000 to get $16,000 value. So how much is it actually worth? Well, I said, how do I gain access to as many people to do deals with? Well, I can't charge a huge amount because I won't be able to have many people in the club, and I won't be able to do deals with them. I'm a licensed real estate agent. I can help you be a buyer's agent, or I can sell your property for you. So I decided, let's try and bring it as low as possible, that I can basically just cover my costs, and then we can meet on an ongoing basis. We could do deals together, and I make my money through doing deals. So thought through, what are my fixed costs? How much does it cost to rent the room? How much does it cost to run the website? How much does it cost for all this sort of stuff? Well, I can basically do this. If I was getting about $97, a little bit less than $100, $97 one time, not a monthly fee, but a one-time only cost. I can keep the doors open. I can pay for coffee for meetings, have some nice water, and we can all get together and meet. And so that's how it works. I was able to bring it down to $97, one-time only cost. You know what? I don't want to make this difficult. I want to make this an easy decision for you. So you say it's an absolute no-brainer. I'm getting $16,000, over $16,000 worth of value for $97. Sounds pretty good. What if you don't like what you see? What if you go on the membership website and it's not great? You come to meetings and they're not great. I'm not giving you everything that I'm promising you. Well, you know what? 100% guarantee, why not? I'll give you 100% full money back guarantee within a year. And again, if I'm not giving you $100, $97 worth of value, I'll write you a check for $100 and we can part as friends. So I'm not here to get rich off the $97. We're here to do deals together with each other. So that's why I'm offering this value for you. So come out and join my club. This is how we do it. How do we sign up? Pretty basic. Go to the website, vancouverrealestateclub.ca. So it's the .ca. I am in Canada, so come out. Vancouver, I'm based here in Vancouver, vancouverrealestateclub.ca. So at the top here, step number 1, at the top right, it says get the course. Basically, join the club or get the course. So just click on that, and you'll click through, and then you'll get access to the second page. So it's very simple. Sign up securely through PayPal. Right here is the PayPal button. Just press Buy Now. Vancouver Real Estate Club membership, and you get access. We'll be going over your bonuses shortly. Your bonuses for acting now. You're watching this video. You're on a webinar with me. You're meeting me live in person. This is your bonus for acting right now. So let's get to those. So if you want to join up right now, take action right now. You'll be surprised at the awesome bonuses you're going to be getting. So vancouverrealestateclub.ca. All right, so you want some more. That $16,000, close to $17,000 value wasn't enough? Well, I'll add some more things in here. So bonus number 1, access to downloadable ebooks. I have all the CMHC files. I have statistics. I have an investor buying guide that I've developed. I've got tips of how to use realtors to put extra money in your pocket, how to finance your investment properties. So after registering, you'll be able to download all of the above files and more. These are hundreds and hundreds of pages of information and value. Value for all of the above, I easily place it at $197 value. Hard copies of all this is easily worth $197. Bonus number 2. This is my updated monthly foreclosure list investment deals membership website and newsletter. So all of these, so you're going to get all the detached foreclosures in Abbotsford, in Chilliwack, in Maple Ridge, in Vancouver, on the west side, on the north shore, everything. All of the foreclosures that are up on the market are going to be listed every single month on a monthly basis. Every single month, the first week of the month, boom, you're going to be receiving this list. Free fix and flip information, line of credit, how to get a zero down mortgage, all of it above for you. So I value this at about $79 a month. This you're going to be getting as membership of the club, member of the club. Number 3, remember those bear index funds I mentioned? Those funds that bet against the market so you can protect yourself. If the market crashes, you can actually make money. Well, I'm going to give you the entire list of available what are called ultra bear ETFs and counter-cyclical index funds. I'm not a licensed securities agent or representative, so I'm going to give you a list of recommended real estate knowledgeable. A lot of financial planners are going to say, ooh, real estate is risky because they don't understand how to structure it in a portfolio. Again, they're just like the bank. They're going to want you to put all your money in a real bank-owned mutual fund. That's not where you're going to be growing wealth. I just explained why earlier, why they do that, because they're commissions. So I'm going to recommend you real estate knowledgeable guys who understand to invest in real estate but still are stock and security specialists and licensed investment advisors. So they'll be able to help you buy these funds and which one to help you protect yourself. So you can short, that basically means bet against Canadian or U.S. real estate with those hedge fund big boys down in the States. You can do the exact same thing they do. So value for peace of mind, again, it's price list. You know that you're protected. If the market crashes, you're protected. So I put a value of that as price list, but again, just access to the list, attached a fee of $149. To do all the research yourself, at least if your time's valued at $10 or $20 or $50 an hour, this is how long it would take to gather all that information. Next up, bonus number 4. List of readvanceable line of credit mortgage providers. Those lists of companies that provided those and lenders that would do those readvanceable line of credit mortgages at 3%, 2.5%, or 2.85%. Well, I'm going to give you that entire list. All of them that are available in Canada. Full instructions and also how to do what's called cash damming. That's a strategy to make all your expenses or most of your expenses tax deductible through using a corporate structure and starting your own sole proprietorship. I give you full instructions on how to do that, and then how to make your mortgage, your primary residential mortgage, how to make it tax deductible more and more over time. It's called tax deductible mortgage plan. I give you full instructions and access on how to do that. Yes, that will, if you're paying a 30 or 40% tax rate, making your primary residence more tax deductible is a huge way to pay it down a lot quicker and to build your wealth. So you'll also get access to my team of real estate accountants, which will help you walk you through setting up all that structure for you. So value, again, you can do this all yourself, but I'm attaching a value of your time of at least 5 hours at $20 an hour of $97. Next off, it's not finished. I've got even more for you. Bonus number 5. I've got 83 rental properties below $100,000 within 1 hour drive of, yes, Vancouver, Surrey, the Lower Mainland. 83 rental condos available for under $100,000 within 1 hour drive. And this list is updated monthly. You get access to this. So I mentioned my plan for you is to start buying $100,000 rental properties. This is how to do it. There's 83 of them out there. There's no excuse. You don't have to be buying a $200,000 or $400,000, $500,000, $800,000 house to rent out for negative cash flow. There are properties available now that you can purchase that will cash flow positively. And it's not about the cash flow. It's about the mortgage pay down, finding a renter to pay down your mortgage. So these are available in Richmond, absolutely, Vancouver, New Westminster, Surrey, Maple Ridge, Abbotsford, Chilliwack, Mission, all over the place. Rentals, they rent out from between $500 to up to $1,000 a month, all of these condos. So value for access to this list, I'm easily offering this for $169 a month. I do all the work for you. I have access to the MLS. I get immediate access when opportunities come on the market. I get immediately notified. So I take time, I prepare this, I send this out to you. If you just bought one of these or two of these or three of these, follow the strategy. Within 20 years, you'll have an extra $200,000, $300,000, $400,000, $500,000 for your retirement. You could have an extra $1 million possibly. I've got a property right now I have under contract. It's a $600,000 fourplex that I've got a buyer that's I'm working with to buy it. And again, we've done the math, just on a simple 3% appreciation. In 20 years, that property is going to be owned free and clear, easily earning $4,000 to $6,000 a month rental income, and it's going to be worth well over $1 million of an asset. So that's just one deal. That's one deal that can change a family's life. So that's what I'm offering you access for. And again, one last thing, and again for $97, one-time only payment. And this itself is my last and final bonus. This pays for everything. This is access to me for an entire day to go down through my no money down strategies. Full day of training, offered 2 different Saturdays a month. So if you can't make it next Saturday, it'll be two more Saturdays after that. So twice a month, I'm going to be offering this live and in person downtown Vancouver. Come out and join me in person. And again, once it's recorded, I'll also be able to post the seminar online. So create your guaranteed success blueprint. Learn how to access that free $25,000 line of credit. $25,000, 5% down allows you to buy up to a $500,000 property. So I can help you get a no money down property. I'll also reveal 30 other little to no money down creative financing techniques that work in BC. I'll be able to show you how to protect yourself from any real estate crash. All these techniques I'm talking about are in my presentation Go onto my website. You'll learn them all there. I'll explain how to do them legally with contracts and paperwork and legal agreements. Everything's provided for you. You'll access me, private coaching and unlimited access to me and my power team. You'll find out who my lawyers are, who my accountants are. You get access to everything. You'll be able to keep 100% of all the profits you make on every deal. Some of the other coaches out there aren't agents, so they have to take a profit from your deal. When you do a deal, they have to take a profit from it. I don't have to. I'm a licensed real estate agent. I can just act as a buyer's agent. I get paid by the seller. So you get to keep 100% of profits on all the deals that you do. It's held near downtown Vancouver, plus recorded online afterwards. And you'll be able to access monthly mastermind programs. So other investors will be there bringing awesome deals. Other investors will be there with money looking to do your deals. So if you find an awesome deal, bring it to the group. You may get it funded there. You may find a joint venture partner. So easily, value for this live training workshop, again, the intensive full day seminar, easily $497 for just the value of the information provided. One of my real estate contracts alone cost me over $2,500. So that's just the value of getting access to the legal contracts customized for BC here. So that's everything, all final bonus, everything all included, $97 one time only. So again, what is the total value plus all the bonuses? $1,100, $200, $1,100, $1,100, $1,200, $10,000, $2,500, $197. Foreclosure list, 12 times 79, over close to $1,000, $950. Index list of bear funds, price list to protect yourself, but let's call it $150. Readvanceable line of credit, again, saving your time from having to find it out yourself, $97. Those list of investment properties that are below $100,000 within an hour drive of Vancouver, the city of Vancouver, 12 times, I'm easily attaching a value, $169 to that each month, $2,030. One day live training, no money down, wealth workshop, $497. Total value, $20,821. Absolutely total value. So your value, easily $20,821. All this is yours for $97 one-time investments. What are you waiting for? Head over to my website, sign up. Click over the top here, say get the course, vancouverrealestateclub.ca. Next step, again, on the second page, you'll sign up securely. Just click in. Done through PayPal, everything's secured, major credit cards accepted. You're protected. PayPal ensures everything is all legitimate. So yeah, vancouverrealestateclub.ca. Just come on over and board, and I'll see you out at the next training presentation. Again, here's some more of the testimonials that I've had. Thane turned a previous real estate investment around from having to subsidize it to the tune of often $1,000 more every month to having about $500 a month positive cash flow each and every month. In addition, property values, because of our techniques, have jumped about 40%. Thane loves to make deals, but I know that he loves to see others profit, absolutely, and succeed as much or more than himself. Currently, I'm involved with 3 profit share deals with him. He's meticulous in ensuring the contract is drawn up fairly to the point of having a lawyer approve it. Incidentally, these 3 properties have moved up in value about 20% in the space of 12 months. I trust him completely and we'll be doing many more deals in the future with him. This is one of my joint venture partners up in Alberta. So come on aboard. This is just head over to vancouverrealestateclub.ca, get the course, and vancouverrealestateclub.ca, the second page, sign up there. And if you have any questions, send me off to tlands@sutton.com. I know you may be on a webinar, so I'll be taking the questions on the bottom. But if you're just watching this on YouTube or just seeing this live, obviously, you can ask me in person or just send off a quick email, and I'll be taking answers to any questions. So next off, contact me for next steps. Thank you, and best of luck. Best of luck with your future investing and wealth building. My name's Thane Lance. My direct line, 604-765-1490. Google me if you want. My meetup group has all the ongoing free investing seminars that I do. So usually on a Thursday afternoon at my real estate office. So meetup.com/Vancouver Real Estate Club. So meetup.com/Vancouver Real Estate Club. And again, my main website for the club to join up, vancouverrealestateclub.ca. Thanks very much and have a great day.